yesterday, the RBA, they have left interest rates on hold. 3.6% is the official cash rate. How's that looking, stacking up against what you're paying with the banks? Yeah. Look, after that announcement, the Governor of the Reserve Bank, Michelle Bullock, said it was using a restrictive policy stance, having already made 3 cuts of 0.25% this year already. So what does that mean going forward? What does that mean for you? The other thing that spooked her a little bit was, yes, inflation had come down, but they weren't expecting those numbers in around the housing and construction industry. I reckon that could be a big factor. To unpack it all, let's tap into the unconventional economist, Leith Van Onselen. Hey, Leith, if I had a mortgage, should I be holding my breath waiting for a rate cut again this year? Good morning, mate.
Yeah, g'day, Ben. Look, I think the notion that we're going to get, rapid reductions, several more rate cuts is probably out the window at this stage. So the RBA did signal in its statement that it is a little bit concerned about stubborn inflationary pressures. And what they basically said is that a November rate cut, which most economists were expecting, cannot be guaranteed. It's going to basically be data dependent. So they're going to wait to see what the third quarter CPI inflation comes in at, and that comes later this month, as well as how the labour market unfolds, all those sorts of things. And it is interesting that after the RBA gave its decision, the financial markets now tipping basically a slightly less than 50% chance that we get a November rate cut, and also they're only tipping one more rate cut by the middle of next year. So a couple of months ago they were tipping several more rate cuts.
Yeah.
Now everyone's sort of wound back their expectations.
The construction industry, housing crisis, it's something that the RBA yesterday actually quoted and said whatever the government does when it comes to the housing crisis, it's probably not going to have an effect on supply really for the next 2 years. I mean, Jim Chalmers has got to be sitting there pulling his hair out hearing stuff like that, right?
Yeah, and unfortunately the federal government continues to obviously, hose huge amounts of migrants into the country at the same time. So there's a shortage created by them. In the year to March, we had 316,000 net overseas migrants arrive in Australia, and that is higher than anything Australia had ever experienced before mid-2022, right, in Australia's history. So we're still running a very high migration program at the same time as the supply side of the market is choked. We've seen a 40% rise in construction costs since the pandemic. Land prices have gone up by about a third. We've seen thousands of home builders and construction companies go bust. We've got higher interest rates. So, really we're in a market where it's a lot harder and more expensive to build homes, but at the same time the federal government keeps, flooding the nation with huge amounts of new people who need housing. And that's really the nub of the problem here at the housing front.
And that's the thing. I remember standing in this studio probably 6 months ago, now around Easter, talking about this exact same thing, that we don't have the people in this country right now. We don't have the skills. We don't have the numbers to build what we actually need. So that's where immigration does come into it, but you've got to make sure you're getting the right people with the right skills that can actually contribute to the problem and not be part of it. So it's a fine balance, and it just doesn't seem like they're walking that line right now. All right, the inflationary figures that you spoke about coming into November, what's going to be the biggest thing for us to look out for to see if there is going to be any movement, and what could happen there? Is there a particular sector? Is there anything that we need to be looking out for over the next 6 weeks before that decision's made?
The third quarter CPI print comes out later this month, and that's really the first major release that the RBA will look at. The other area that they look at is basically the unemployment rate. So the Reserve Bank has basically forecast that the unemployment rate is going to stay at its current level for the next 18 months or so. And if it rises above its current level, that could also prompt a rate cut. So those are two needs to look at. There are some inflationary pressures we've got to worry about here. So one of the reasons why inflation's come down is because the federal government and the state governments have doled out lots of subsidies for energy to basically lower our energy costs. The problem is those subsidies are winding off, and what that means is that our bills will then go back to what they should have been, and that'll put upward pressure on inflation. Also, we're now starting to see renewed pressures in the rental market. So as I said, because of this high immigration program and not building enough homes, the rental vacancy rate has collapsed to a fresh record low. So Cotality reported today that Australia's rental vacancy rate is now at the lowest level in its history. And as a result, rents are now rising again, and rising quite quickly. And rents are one of the biggest components of the consumer price index basket. So that's another area of pressure. And again, this gets back to, bringing in far too many people, far more people than we can build homes for. And that's putting upward pressure on rents, which will then also put some upward pressure on inflation alongside energy prices. So, the Reserve Bank's basically got to try and balance all this stuff out. It has no control over these things. These are all things controlled more by governments. And unfortunately, it only has one tool, and that's interest rates. And it's got to basically, try and compensate for policy failures on the federal and state governments.
Leith, thanks for putting it into plain language for us, mate. Really appreciate you stepping through it and unpacking it for us. Leith Van Onselen, the unconventional economist. So there we go. Expect power bills to go up, rents too, to go through the roof. Just what we want. Isn't that some good news for today?